Hey there, everyone. Dave Keller here with Market Misbehavior, and welcome to my weekly show here on StockCharts TV. I'm the president and chief strategist at Sierra Alpha Research. So enjoy bringing you some weekly thoughts here on StockCharts TV. Don't forget to tune into my market recap show called Chart This with Dave Keller. That's every trading day after the close. And also my podcast called the Market Misbehavior Podcast, where we interview top market practitioners. You can find both of those and all of our recent episodes on my YouTube channel called Market Misbehavior. You know, today we're going to update some of the charts we've covered recently here on StockCharts TV, particularly looking at breadth indicators. Last week we looked at the market summary page, which is a brilliantly redesigned page on the StockCharts platform. Talked about a couple different measures of breadth and as well as other things using that market summary page. You know, with the surge we've seen today, we're recording this Monday, May 12th, right before the U.S. market close. The S&P and the NASDAQ have had incredible upside follow through after the U.S. and China trade talks were updated here, and risk assets generally pushing to the upside. It's enough to push the S&P above its own 200-day moving average. I would argue some of the breadth indicators we talked about before have become much more constructive just in the week or two since we've been talking about them a little more closely. So we'll talk about moving average breadth, what this upswing today really means in terms of improving breadth conditions. I'll also update you on the Zweig Breadth Thrust, which is a one of those indicators that does not signal that often, but when it does, I've learned to pay attention. And then finally, the stoplight technique we applied to the S&P 500 recently. We're now in the green light phase. We're above the 200-day periods to give a long and strong bullish signal for the S&P 500. All right, with that in mind, let's go to our first chart. And this is a chart that's featured on my Market Misbehavior live chart list. This is a list of charts that I keep updated on the StockCharts platform. So if you want to follow my charts along with me as we go through the trading days and the volatile year of 2025, you can go to marketmisbehavior.com/charts. That'll get you to the point on StockCharts TV where we're tracking all of these charts every day. But this is the one of the breadth charts that we feature, and it really from the top is showing the S&P 500 with the 50-day moving average in pink, the 200-day moving average in red. In the second panel down, we have the percent of S&P stocks above their 200-day moving average. As you can see, it's just pushed above 50% for the first time since early March. We'll come back to that in a little more detail here in a moment. And then at the bottom, we have the percent of S&P 500 members above their 50-day. That actually finished today above 70%. So we've seen a pretty impressive rally in the S&P 500 for sure, right? From a low around 5,000 on a closing basis up to where we're at, just above 5,800. But the breadth improvement is what I think is so important here, because it really speaks to the fact that not just the largest companies that dominate the S&P, but it's all the other stuff, all the other 490 so names in the S&P 500 that are also showing a decent amount of strength here. So how does that actually play out here? So, here when we're looking at the percent of stocks above their 200-day moving average, you can see that we broke below 50% in early March. Now you have to go back to, November of 2023 for the last time we were below 50%. That was during this corrective period, September, October, November of 2023. From there, we went above 50%, and that led into a pretty bullish 2024 where the indicator remained above 50% for the entirety of that calendar year, finally breaking back below 50% in early March. From there, the indicator got to around 20% at the April market low. And then from there, as the S&P made a V bottom, made a higher low, and then started to rotate higher, we've seen that breadth indicator improve over time. But one of the warning signs we've shared is watch the 50% level, because here, like in late March, we didn't get back above 50%. That was a great indication that this is a counter trend rally within a downtrend phase. But when it finally breaks above 50%, and we'll get to some other previous examples here to see what I mean, usually means sustained gains going forward. Now, the bottom panel shows the percent of stocks above their 50-day moving average. So the 200-day, this is more of a long-term breadth measure. And the bottom, looking at the stocks above their 50-day, this is more of a short-term breadth measure. Now, the short-term breadth has gotten very bullish very quickly. In early April, this was down to below 10%. You can see it broke above the 50% line at the end of April, and from there has continued higher. It's arguably getting so high to where we often get a contrarian sell signal, right? Because short-term breadth is so positive. It tells you kind of everything's going up. You probably expect a short-term pullback of sorts. But today we're going to talk a little bit more about the long-term breadth analysis and what this signal today really means. Now, to do that, we have to bring in more data. I was taught when in doubt, zoom out. And one of the great benefits of the StockCharts platform is you can bring in a lot more data, particularly if you're a paid member, which you, of course, all should be, and you have like an extra pro level membership. You can bring in a ton of data, probably more data than you'd ever really need. But it's really helpful to look at a breadth indicator like this, which doesn't signal that often. This signals maybe every 2 years on average. And so bring in 15, 20, 25 years of data can be so valuable because you can really start to look at historical cycles, not just the last year or two, but previous bull cycles, previous bear cycles, and see how indicators like this actually tend to change their configuration over time. So that signal that we just mentioned, going above 50%, I've been a little more specific here, and I'm just looking for examples where the indicator went below 25%, which means 3 out of every S&P stocks are below their 200-day, so pretty significant negative breadth. And then it goes back above 50%. And those are the green vertical lines that you see indicated on the chart. So the last time that happened where we went below 25% and then above 50% was here in the fourth quarter of 2023. This is coming out of the October 23 low. You can see very quickly we got this bullish signal. The next 12 months, obviously quite strong. That's going into 2024. Before that, it was right after the October 2022 low, which is obviously the most significant low since the COVID lows. Again, we went very, very low. We actually did almost break above 50% in the summer, but didn't quite get above there. We reset and then finally broke above the 50% level there in November, and that signaled again quite a bit of strength coming off the lows. After the COVID low here in mid-2020, you actually had a buy signal in the second quarter. It was actually a pretty big spike. It ended up going briefly below, but overall we'll consider that a bullish signal because it happened. Before that, it's coming out of the 2018 low here in the first quarter of 2019. We can see the indicator went down to around 10%, back above 50%, and that was a bullish signal. Going back for the last 15 years, you can see a bunch of examples of what worked out remarkably well. The only time it did not work out was back here, which is in 2015. 2015 was one of the more bearish years we've seen in terms of a fairly consistent, kind of drawn out bearish phase, right? Market sort of topped out, made a new low in the summer of 2015, ended up making another low in the first quarter of 2016. Now, in the middle, you actually did get that buy signal where the indicator went above 50%, and you can see that that's where the signal occurred. Now, what didn't happen or what happened differently in this one example, it might give us something to look for going forward. Well, in all these other times, you can see that the buy signal occurred where we went above 50%. That occurred, and the S&P went above its 200-day moving average and held it. You can see again here coming out of the COVID low, we went above the 200-day and we held it. That's what did not happen in late 2015. We had the buy signal, we broke above the 200-day moving average, but then we immediately stalled out and broke below the 200-day. So if you think of the 200-day moving average as kind of a stop for a long trade generated or indicated by this breadth improvement, then overall it's been a very successful indicator going back to to the 2009 low, right? Basically going back through over the last 15 years. So that's the main change that we're seeing here. Breadth going from very negative to much more positive. Now, there are other breadth indicators, which we've covered in our work recently, that have also generated some pretty significant buy signals here in May of 2025. One that we made some noise with on our show our show called Chart This with Dave Keller was the Zweig Breadth Thrust. This is an indicator named after Marty Zweig and really was created through his work as he was analyzing the markets. He did some analysis on what are called the breadth thrusts. And general idea of a breadth thrust is the breadth is very negative and then goes very positive in a short period of time. Kind of what we're doing on the previous chart, looking at the indicator getting very low and then back above 50%. Marty Zweig's version actually used advanced decline data for the New York Stock Exchange, and he found a fairly systematic way of identifying when the market was in a new uptrend phase. Now, the way that he does this is it's using the advanced decliners. So you basically want to look at the percent of the New York Stock Exchange advancing issues as a percentage of the total issues. The raw data is super noisy. That's in gray in the background, so I've kind of grayed it out. But the way that we use this is a 10-day exponential moving average of that raw data. And that's the line that you see in green. Very simply, the indicator needs to go from below 0.4 to above 0.62 within 10 trading days, within 2 weeks. And if that happens, you get a buy signal. Now, StockCharts awesomely has an indicator already built in, which actually tracks this, and you can see it up here. It's exclamation point BINYBTD. That actually tracks this, and there are a series of indicators on StockCharts, which are really binary indicators. It basically almost all of the time will have a reading of 0, and then if a particular set of conditions, like the ones that I mentioned here for the Zweig Breadth Thrust, if they all fire, the indicator just goes to +1. And that was designed that way as a binary indicator, so you can show it on your chart like this. The indicator basically has a line at 0, and then anytime the indicator fires, it will be a +1. The way that you set it up on StockCharts so that it gives you these great vertical lines when the signal fires, this is what you want to do. Use the logic that I have at the bottom here. I have the indicator called price. I use that ticker that I shared you earlier, and then position instead of below, which is where indicators usually are, in like a panel below the price, you want to set it as behind price, because what that's going to do is just overlay it as these vertical lines. And when the indicator fires, it will go up to +0, and it'll show as a vertical line on your chart. Now look back over the last 25 years at every time this Zweig Breadth Thrust has fired, and you'll see that it happens pretty consistently after the market's pulled back, and then you get a big sudden upswing in a short period of time. And again, this breadth thrust, where the breadth is very negative, then goes very positive in a compressed time frame, usually ends up being pretty well. Now, if you look on this chart in the top, can you notice one particular example where it did not work out very well? And it's actually a time frame we just mentioned on the previous chart. It's right here, right? That summer of 2015, almost exactly like the same signal that we saw with the moving average breadth, right? We got the Zweig Breadth Thrust. The market did go higher for another couple weeks, but then we ended up rolling over. Again, this is that same time where the S&P failed to hold its 200-day moving average. As a result, it basically said that breadth thrust probably wasn't enough, and we're going to end up making a new low. So again, these breadth thrust indicators, this breadth improvement, can be very valuable and help you understand strengthening price and breadth action. And I would use the 200-day as a way of just confirming that the breadth thrust is playing out as expected. Now, how can we do that sort of thing, looking at the charts in particular? I like using a stoplight technique. This is a chart I've shared recently. I got a lot of questions after I showed this on one of my shows, and so I just wanted to talk a little bit more about what the stoplight technique is, and particularly how we can set it up on the StockCharts platform. What I'm basically saying with this visualization is I'm seeing the S&P with some key price levels. 5,500 was that low from early March. That's actually a Fibonacci level. I'm not showing the Fibonacci retracements here, but it was a 61.8% retracement level. That's why 5,500 seemed like a decent place to look for support. So as the market bounced off of 5,500 here in mid-March, it made a ton of sense. So 5,500, an important level that we tracked. And then again, the breakdown below 5,500 in early April really confirmed the fact that the market was on its heels and going a lot lower. After we bottomed out a little below 48.50, we then rallied back and broke back above 5,500. So once that level was established, anything below 5,500 I think is pretty bearish. Anything back above 5,500, certainly not as bearish, and I would argue more neutral. But what about an upside follow-through? What would we need to see to turn more constructive on the markets as a whole? I'm looking up to around 5,750 to 5,800. That's the 200-day moving average, which is here in blue. We can see the March swing high was right around 5,780 or so. So right around 5,800. And so I would say above 5,750, and we'll call it 5,760 or so on this chart. That's a bullish, condition. Green stoplight signal, meaning basically we're above a new swing high. We're above the 200-day. The market's back to a constructive footing. So over the last couple of weeks, I've used this chart to just help as a gut check on the market conditions, right? If we're below 5,500, it's bearish. If we're between 5,500 and 5,750, we're neutral. If we're above 5,750, we're in a bullish condition. As long as we hold that range, then the conditions remain as illustrated by the stoplight technique. So I would say this positive breakout above the 200-day combined with the bullish Zweig Breadth Thrust, the bullish moving average breadth, really tells me we're setting up in a fairly constructive price pattern here as we continue on the month of May. Now, how did I create this stoplight visualization? Well, the bad news on Sharp Charts, it's a little manual, but it's not too hard once you get the hang of it. We clicked on the annotate button, and I'm using a trick that Arthur Hill taught me years ago, which is to use the rectangle tool. So basically create a rectangle and draw this shaded area. Now, when you first do it, it might look kind of like this, like a solid color, right? It's not shaded at all. Don't worry about that. Just get it about where you want to do it. And then click on the color and use this little slider to make it a little more transparent. So that's how you can actually come up with a really good color, and then you can set the range. So I love this as a way of identifying, instead of a support or resistance level where a horizontal line can be really helpful, this actually does a support or resistance zone or range, which I think is a really good way of illustrating, particular levels or areas which you think are important. So once you have those, you can create them. So what I did was basically just create 3 different colors, and then I made some big rectangles and highlighted these areas. I also used some blue horizontal lines just to give a little more clarity and separation between the 3 different areas of the stoplight. Once I did that, I saved the chart, and I have these stoplight charts saved on some of my chart lists, and I love to go back to some of those previous charts and see what the stoplight looked like. Actually look at what happened in the days and weeks and months after I created that stoplight visualization to see how the market actually followed through or not with some of the assumptions that I made. Now, if you use the StockCharts ACP platform, the really good news is there's a built-in stoplight indicator. And instead of doing it all manually with drawing the levels, it actually has some dialog boxes so you can enter the particular levels. It'll create the shading for you automatically and give you a pretty good backdrop with which to analyze in the markets. But if you use Sharp Charts, which is what I primarily use, you can do it pretty easily. You just have to use the annotations tool. And again, sort of defining those levels, creating the boxes and everything, I think is a pretty helpful exercise to sort of make sense of things. So that's where we're at as a review. I mean, we start looking at the moving average breadth, and I would say what we saw here on Monday, May 12th, for now, appears to be a very bullish breadth improvement, and you could really call it a breadth thrust, which is when the breadth goes from very negative to much more constructive. We looked at a deep history of the time when the S&P, the percent of stocks above their 200-day goes from below 25% to above 50%, which is what has just happened today. And as long as it holds that 50% level, most of the time, this has actually been remarkably strong. Going back for the last 15 years, only one example where that didn't play out. Now, we can also look at other breadth indicators like the Zweig Breadth Thrust. We've highlighted the bullish percent indexes. All of these have shown a broad improvement in price action in the S&P 500 members in the broader New York Stock Exchange. And that really suggests constructive price action going forward. Now, the way that you validate that sort of movement, I love going back to sort of a stoplight technique. We talked about how these breadth indicators tend to be pretty successful as long as the S&P holds the 200-day moving average. Most of these breadth thrusts that we've highlighted happen when the S&P itself is getting above its 200-day. That late 2015 example, what was different? The S&P failed to hold its 200-day. So for me, I'm seeing this as a green light. I'm seeing the market as in a bullish phase until and unless it breaks below the 200-day. At that point, I think we go back to neutral. I think you have to be cautious because that would suggest that all this optimism coming off the early April lows, all the optimism about tariffs, etc., starting to run out of steam. But if we can hold the 200-day, if the S&P can hold above that 5750 to 5800 range, certainly seems like the market is in a bullish framework right about now. That's it for the show today on StockCharts TV. As a reminder, if you want to follow these charts along with me every trading day as we debrief on the market action and focus on things like the 200-day breadth conditions, the stoplight technique, and a lot more charts to help you make sense of the markets, you can find it on my YouTube channel called Market Misbehavior. Also, as a reminder, all the charts that we showed here today, I think all of the charts, most of the charts we showed today are on my Market Misbehavior live chart list. You can find that at marketmisbehavior.com/charts. That's it for today. I'm Dave Keller with Market Misbehavior, reminding you it's always a good time to own good charts.